Hello everybody. So MicroStrategy buys Bitcoin again. He did it again. Is it a Monday thing for us until Bitcoin breaks 100k? So this morning he announced he tapped the ATM for about 1.5 billion and he bought 15,400 Bitcoin. The yield, the BTC yield as of this year to date, is 63%. MicroStrategy seems to be in a rush to acquire Bitcoin. He's front loading the buys. He's way ahead of a 21 billion plan, and he's way ahead especially for the ATM part. If you look at all of the money that was issued since the 21 plan was outlined, he issued 9.7 billion part of the ATM program and only issued 3 billion as part of a 21 billion convertible debt program. So, as many bears as there are out there claiming this is mostly a volatility play, this is mostly a CB convertible bond volatility arbitrage play, they buy the converts, they short the stock, we need to point out that it's only 3 billion of convertibles that have been issued ever since the new plan was announced, but 9.7 billion has been issued of the at the market offering. So right now, 81% of the play that we're in is fueled by the ATM and not really fueled by the convertible bond. So when people say, oh, this is just a CB vol story, it's important to realize that that's only 20% of the story. And did these hedge funds who are shorting MicroStrategy while buying the converts, did they take into account the fact that he would actually speed up the ATM so much? And does that bring any imbalance into the trade? I think Michael Saylor plays a whole different type of ball game, and I'm very happy to see him tap the ATM so heavily before we are above 100k, taking advantage of that. So, like I said, before Monday, December 2, what we had was $210,000 of shares. Now we have 214,500. He issued, likely over the holiday week. Last week was a holiday week. He likely issued, we know he outlined that. He issued 3.75 million shares. So 3,750,000 shares, roughly at 395. I'm going to assume that's 1.48 billion, and they must have had some cash on the balance sheet too, which is why they bought 1.5 billion. Most of the 1.5 billion buy in Bitcoin was done from the ATM, and you can see the Class A shares issued fresh as of today. It's 214 million Class A shares. Last week it was 210 million. So he outright issued the stock to buy the Bitcoin. Again, do the ARB traders who are shorting the stock, did they take that into account? I'm not so sure. As he outlined on the last CNBC interview that he did, that was very much criticized by all of TradFi, he outlined, I'm selling a dollar bill for $3. That's a clear reference to me to the ATM, and of course the convert in the form of an option 2 down the road. That's going to happen to the convert, but in the convert the dilution happens down the road. Here the dilution happens today. He's diluting today. So if you sell a dollar worth of BTC for $2.9, you're effectively doing that. You're effectively printing dollar bills at a $3 value, and you can see that's a 2.92. That was a premium that he likely did a lot of ATM at. He did it, well, maybe a little lower than that, but every time he buys, every time he adds Bitcoin to the balance sheet, what is it that happens to the price to NAV? The price to NAV ratio goes down every time he buys, and now that he bought some more, the price to NAV ratio is probably even lower. It's probably closer to a 2 now. This website, MSTR Tracker, which is a great website, by the way, go look at it. It's great. It has not updated yet. So the strategy to me right now, like I said, roughly 80% of the new MicroStrategy buys are fueled or powered by the ATM. And when I look at this chart, when I look at the strategy, this is what I think. This is how I interpret the strategy of MicroStrategy. It's a price to NAV strategy where people who are savvy, people who follow the stock, no financial advice, but a lot of retail investors who are in the know, they like the stock around 2x NAV. So you start off, say the stock trades at 2x NAV, 2 times price to net asset value in the form of Bitcoin. Retail starts buying. All across the way up, you have a perpetual bid from the ETFs, from the index funds, and even more when the QQQ is added. Sailor monitors the price to NAV. Once the price to NAV gets too high, and let's assume it's a 3x NAV, maybe more, maybe less, Sailor starts tapping the ATM. When he taps the ATM, the price to NAV goes down because you're issuing more shares. Maybe as seller taps the ATM, maybe as the price goes down, that price goes down, leads shorts to double down, say, haha, you see the NAV is going to go down, it's failing. He taps the ATM, and then what happens? Well, he buys more Bitcoin, and he announces he buys more Bitcoin, maybe at 2x price to NAV, and then retail buys again, because retail is like, oh, look, he's buying more Bitcoin. More Bitcoin has been bought. The perpetual bid, of course, always keeps buying the stock from those ETFs, and then retail, perpetual bid, and retail especially buying even more stock, being excited, having learned that Sailor tapped the ATM the week before, propels the stock back at 3x NAV. And when the stock is back at 3x NAV, Sailor taps the ATM again. Maybe this time it's not the short that doubles down, which compress the NAV. Maybe this time the NAV is compressed because Bitcoin actually went up. And all of a sudden, well, you see Sailor bought more Bitcoin, and the price to NAV went down. So retail gets excited again and sees the stock go back down to a 2x NAV, and they buy again, and so on and so on. This up and down and up and down and up and down in the NAV, which you can clearly see when you look at the NAV. It's upward volatility, but it's up, down, up, and down again. That, in my view, is a big part of the playbook of Sailor. And so, you know, the key is playing with that NAV, and whenever that NAV gets high, you tap the ATM, and whenever that NAV is low, you trust the market to do something about it and to start getting back into the stock. And you know, the advantage of doing this is that you create a volatility in the shares, you create a volatility in the stock, and this volatility in the stock makes the convertibles even more valuable when it comes to the convertible bond issuance. And so maybe by tapping the ATM, maybe by creating this pattern, Sailor is setting himself up very well for a $21 billion convertible debt program that he may start issuing, say, throughout 2025, because this gets more valuable. The convertible debt gets oversubscribed and gets more valuable the more we see these ups and down in the price to NAV. And this leads me to think and reply to some of the YouTubers out there, TradFi, who are saying that really, Sailor is bringing sheep to the slaughter because retail investors are paying up for 2x NAV, and it should be only trading at 1x NAV, or anything that has to do with that NAV debate. And so if you are a short-term buyer of MicroStrategy and you're looking for a trade, like a lot of TradFi, and you're in it for 6 months, that may very well be true. But the average Bitcoiner, the average buyer of Bitcoin on MicroStrategy, in my view, and that's my philosophy with my shares, they're long-term. They're all about the long-term. It's all about holding it for, well, some people, the real maxis, in perpetuity. As Sailor says, at least 4 years. If you don't want to hold it 4 years, you shouldn't touch it at all. That's what Sailor says. I think most reasonable people think a minimum of 10 years is probably good when you look at an asset like Bitcoin. And so, if you look at Bitcoin over the long term, and if you internalize the concept of a Bitcoin yield, so right now, for example, the NAV is a 2.4. So that means if someone spends $97,000 on MicroStrategy stock, they would get the NAV equivalent of 0.43 Bitcoin. If they used Coinbase, spent 97 on Coinbase, they would get 1 Bitcoin on Coinbase. But the Bitcoin on Coinbase that you buy in 2024, it's still going to be worth 1 Bitcoin in 2024. 2034. That's not going to change. So if you're short term, of course, it's a better deal because you get a full Bitcoin right away. Next year, you'll have a full Bitcoin, but you'll also only have a full Bitcoin in 2034 because Bitcoin does not earn a yield. Now, what about those who buy MicroStrategy? Let's assume you buy MicroStrategy, you spend $97,000, you get 0.43 BTC in the form of NAV via way of MicroStrategy share. And then MicroStrategy, who holds the Bitcoin as a form of NAV for you, what does MicroStrategy do? It earns a yield. So let's assume, and I realize some may think this is too high of an assumption, but it also works if you do 15%, by the way. It works at 15% too. So the point I'm making is similar. So at the end of year one, let's assume MicroStrategy stock earns 25% BTC yield, you get 0.54. End of year 2, you get 0.67. Compound that until end of year 10. Your 0.43 Bitcoin worth of NAV after 10 years of a Bitcoin yield on top of each other become 4 Bitcoins. And so if you can see in this scenario, assuming that the price to NAV remains constant over 4 years, in this scenario, you really break even after a 4-year period. You really get about 1 Bitcoin after a 4-year period. And in terms of face value of the trade, you really break even if the price to NAV stays the same. But over the long run, even if the price to NAV compress, let's assume the price to NAV at the end of year 10 is a 1.5, I believe this is still a winner over the long run because of the yield you earn in the underlying asset. In other words, you pay up for the Bitcoin today, but in exchange, you get a Bitcoin yield. And it's a matter of owning the asset, owning MicroStrategy long enough for that yield to compound and to outnumber whatever sum of Bitcoin you would have had on Coinbase. That's how I view it, that's how it works, and that's why the Bitcoin yield makes sense to me. So 0.43 Bitcoin of MicroStrategy NAV in 2024, if you earn that yield, that would be 4 Bitcoin in 2034, assuming a 25% yield each year. And you know, like I said, year to date was 63%. It was 63% yield year to date. It's beyond what we could have hoped. Will there be a year where there's only a 10% yield or a 5% yield? Sure, maybe. But, you know, there's another cycle coming up in 2028. Who's to say that it can't redo these big yields at least a year or 2 years or 3 years out of a 10 years ahead in this scenario? So that's why MicroStrategy is a long-term hold for me. This was, of course, not financial advice, not investment advice, just entertainment. Hoping you were entertained. Please like, please subscribe. Follow me on X, follow me on Patreon, comment, like, you know what to do. I appreciate all of your support. Thanks for watching. Have a wonderful day.